Welcome back, crypto lovers, to another podcast. Well, not a podcast. I actually just recorded a podcast, so just stuck in my head. But for another video about the crypto markets, it's Jomo here, and we're going to talk now about why there's no need to panic in being a trader, right? Being an investor. You don't need to panic. You just need to recognize the possibilities, the probabilities, and do and flow with what the market is trying to tell you, right? So right now we're looking at BTC, right? Now BTC is what most crypto lovers are looking at as the go-to kind of like an index, just like a Qs, the Nasdaq, the SPY, to understand what's happening in the market. So first of all, we can see that we broke structure. Now, you know what? Let's go even larger than that. Let's take a look at the weekly. On the weekly, right until just this week, everything looked kind of okay, right? We had this moving trend line from over here, right? You can see that we touched it once, we didn't touch it again, but trend line, so everything was going up, right? We had higher lows, right? We had a higher low, and a potential higher low here. We had higher highs, right? Higher highs. So everything looked good. This is what is considered a trend, up, right? An uptrend. Now, we came all the way from 70K all the way to 16K, all right? From 70 to 16, that's a big drop, 76% or something like that, all right? Then we had some sideways action, kind of a lot of macro narratives were dominating the market. First of all, it was, war back in 2022, right? War, Russia, Ukraine. So that hurt, right? Regulation around crypto, it started with the FTX fallout and, Celsius and Lunacy. So those were kind of negative things on the market. But then later on, some positive things started to happen that helped crypto develop, right? It was the banking crisis, first of all, and then it was the ceiling debt. All those are good for crypto because they illustrate why crypto is important, and they move people to diversify their holdings into something else that is not in the banking system, that is not ruled or controlled by a government, and so on and so forth. So all these, narratives led all the way up. Now, what happened over here, right, in this last up, last kind of fake out, is that in that week, or that leading to that week, during that month, a lot of ETFs came into the market, or a lot of ETF requests came into the market, right? It sounded really bullish, like everyone and his mother is trying to get his hands on a spot ETF for Bitcoin. Now, one of the days, I think it was one of the top days, it was a news failure, right? A news failure is when there's a certain type of news, either good or bad, but the market doesn't go right with the news, it goes the other way around. In this instance, I think the BlackRock, Larry Fink, CEO, talked about how Bitcoin is inevitable and the crypto and the Bitcoin ETF is inevitable, and actually crypto is a good thing, and it closed red for the day, bad day, it was a news failure, and since then we're actually going all the way, we're down and down and down. Now, until here, right, as everything looked okay, but right now things are not looking as good, and I will illustrate why. The red flags, right? We have some red flags. The red flags, all right, one is we broke structure, right? We broke structure. We broke structure, and it's not looking too good on the structure wise. We had a beautiful cap and handle. It looks like it wanted to continue up, but it didn't. So it broke structure. This is the least important one, because you can still reset the structure. But let's go to the second red flag, right? We broke below the 200-day moving average, all right? That is not a good thing. We broke below the 200-day moving average. Let's go to the day so we can see it a bit better. The 200-day moving average is in red, okay? And that's a bad sign, right? That's a bad sign, always a bad sign. And we actually closed. We didn't only break below it, we actually closed below it. And we are drifting right now below the 200-day moving average, okay? This isn't good. This is not good. Now, the third red flag is, right, that it went down and didn't bounce back up, all right? If it would have bounced, that would be considered something that I call a tennis ball action. You know how we throw a tennis ball and it bounces back up? That's beautiful. We still have time, all right? Maybe it will happen in the next few days, but it needs to happen in less than a week, all right? Now, so far, it's not a tennis ball action. It's an egg action. How you throw an egg, it falls and just splashes. That's what's happening right over here. Price action is staying at the lows. This is not a good look for Bitcoin right now. So the third, all right, the third red flag is egg action instead of tennis ball, okay? That's not good. Now, no need to panic. We are traders, all right? We understand how markets operate. We understand there are possibilities and there are probabilities, all right? Now, the fact that something is a possibility doesn't mean the probability is high. And the fact that something has low probability of happening doesn't mean it can't happen. Remember that. And that is why we as traders were never surprised. Now, let me just copy this because I'm going to remove everything else. I'm going to try to illustrate what can happen from here on, right? And let me put that back on again because these are the red flags because I want them to put here all the red flags. Now, something to look. Or in our community, oh, by the way, if you're not part of the community, you can always join our community. You can click on the link in the description and it will take you to our Patreon page. If you want to join like-minded people in community that trades together, understand what's trading all about, understand how to make consistent profitability month over month. Around 90% of our month are profitable with the trade execution we do. You can join. It's not expensive and you can make much more money on one trade or two trades that you will actually invest on this. The fee is just to see that you're serious, all right? So in our community, we talked about a possibility that Bitcoin will break right over here below the 150. Now, I said, first of all, we can get a bounce for the 150. That would be the most bullish and the less bearish. That didn't happen. I said the second thing that might happen is a bounce from the 200-day moving average, not as bullish as from the 150, but still kind of a good area to still bounce. That didn't happen too, all right? We're still below it. Now, the third possibility I saw is that we get a bounce from the 25-ish area. Now, this is a big support area that can happen. And we can see that this actually, if I take it all the way, you can see that this is a big confluence area. A lot of trading has been around it, right? You can see that over here, we got kind of supported by this area. Over here, this was rejected from this area. So it was support, then resistance. Then we got rejected, went down, tried, attempted again, got rejected again. Then finally broke up. This became support, right? So now it is support. What will happen next? We don't know. What I do know is that this should act as support if nothing else changes within the market. Now, let me explain a little bit. Price, all right, moves with the decision of the market. What is the market? The market is the entire ecosystem of actions of traders, investors, or whoever at the same time, selling or buying, right? So all market participants, what they do is they decide collectively where will the price go by their actions, right? And now we need to ask ourselves, all right, what are their actions based on, right? The actions of people in the ecosystem, which are investors, traders, and so on, is based on their thoughts of what will happen in the short term, all right, depends on the time frame, if it's short term, medium term, or long term, and what they think is the possibility of Bitcoin and the crypto market or risk assets overall, right? Because you have different institutions maybe that are diversifying into crypto, out of crypto, if different, macro stuff are happening. For example, when there is a strong dollar, there's less of a risk-oriented action. Why? Because if the dollar is strong, people invest in the dollar because it's strong. And it had a big move from the lows all the way until 2 or 3 months ago, maybe 4 months ago, when it reached the high. And since then, it has fallen, but now it's bouncing back again. So maybe people are thinking, hey, the dollar is strong, we'll diversify back in the dollar out of crypto. Another macro issue, a macro narrative is that China, all right, is having some issues. Now, there was a lot of talk, there was a big narrative about how Asia would be the next dominant kind of person or people or entity, all right, that will drive the market up for the next bull cycle. But what we're seeing right now, at least in the short term, that China is having some issues, right? The biggest, I think, real estate company right now is defaulting and is entering into bankruptcy. That is a bad thing. In the short term, look, that's what happened. A lot of selling, right? But in the longer term, that will mean that China will need to have a beautiful deleveraging. And beautiful deleveraging means that they will need to finance that debt somehow and get out of debt and print some money, quantitative easing back again. In the long term, it will push the price of fiat down and Bitcoin and crypto up. That's how it works. However, this area might not hold, right? Maybe something that I'm not aware of or the market is not aware of, but big participants of the market, institutions and whales are aware of, right? So where do I think we can find support later on? I think we can find support around this last 19, because it's all the way from here, right? It's an area actually. You can say this is an area, kind of the 19 to 20K area-ish is where I think we'll find our last support, right? I think there is the highest probability to find the last support around the 20K area if we break the 25. As long as we didn't break the 25, I would say 25 is the next area if we rebound from it and stay above the 25 area. So maybe we'll have a reset and continue, all right? Maybe, or we can just have another, shoulder, and then we have a head and shoulders and then go down, right? So different possibilities, each have different probability. But right now, I'm focusing on this area. I'm going to put some DCA into Bitcoin on this area for my long-term bucket. My long-term bucket is, just me understanding that Bitcoin over the long term will make outperformance gains, and that's why I want to invest in it as well. You don't have to do it. However, I will do it by here. And if this breaks, I'm okay because I don't put all my money in just one area. I did some a little bit here, some a little bit here, bought a little bit here, bought a little bit here. I will buy here. If it goes down here, I'll buy here. I buy each and every month just a little bit. It just accumulate more and more and more Bitcoin for the long term. All right. So what I try to do here is to illustrate some possibilities and to give you what I think the probability is to hit each and every one. But bottom line, things are not looking good, right? Things are not looking good. Why? Because we broke structure, as I said over here, right? We broke structure, doesn't look good, right? We broke below the 200-day moving average. There's a big saying from big Wall Street guys, all right? Big Wall Street guys from the past, for example, like Paul Tudor Jones, they say nothing good happens below the 200-day moving average. And we broke below it over here. We broke below the 200-day moving average. As long as we stay below the 200-day moving average, that is bad news. And the third red flag, again, is that it's an egg action and not a tennis ball action. So we are actually staying below it. It doesn't look good. It just doesn't look good in the short term, right? In the short term. Now, things can change swiftly. Something can happen in an instant. Bullish news, and we actually close good. We get back to reset. Maybe we break the 32, and we are back to bull market and everything. But let's just take a small look about what happened in the past, right? 2017, we had something quite similar, right? We had, the lows over here, the $3,000 kind of low, and then we had some sideways action, just like we had on the 16K area, right? This is what happened, right? Boom, boom, boom. And then we had a big up move from the lows. We had an uptrend. It looked good until it didn't. And then it went sideways action. We don't know what's going to happen. Then it broke structure over here. Didn't look good. Broke below the 150, broke below the 200. And then some iffy things happening. What happened over here is a bearish retest, right? This is a bearish retest. We test again this area of which was support turned into resistance, all right, over here, and then we went all the way back, and eventually we actually retested just a little bit above, the $4,000, just a little bit above the $3,000, which was the ultimate low of that cycle. That's why I'm saying that if we go to today, all right, today it looks very similar. Just instead of $3,000, we have a fixed $16,000, and instead of $4,000, I think we can get a retest of the 20K area. Now, this is a fractal. It doesn't mean that what happened in the past will happen in the future. It doesn't always pan out that way, right? Please understand that the fact that something happened in the past does not mean that we'll play the same way again. However, it gives us a sense of understanding what might happen. Now, Jomo, you can ask me, can we see new lows? Can we go down? And I would say, of course, it's a possibility. I don't know the future. No one knows the future, right? If something really bad happens, I don't know, stock market breaks down, dollar breaks up, ferociously. Everyone is afraid of something. There's a new war, China, Taiwan, whatever. I have no idea. Yes, we can go as low as $9,000. I don't know, maybe $3,000 again. It can happen. But look at me, I'm smiling. I'm not panicking. I'm not panicking. Why? Because first of all, my long-term positions, all right, would always be in profit because I DCA into them, all right? I DCA, so I have entries from really, really low. That's why when I have long-term buckets, I don't buy them all at one place. Because if you thought, hey, everything is looking good over here, and I will put my long-term bucket, I will buy everything if we break the 30K, and you bought over here your entire position when we broke the 30K again, because you thought that if we go above 30K, that's it. That's game over. We're a new bull market, bull cycle, because you saw something in Twitter and a very irresponsible influencer told you that if we break the 30K, that's it. It's new bull market, and you put all your money. Now you are at a loss of more than 10%, and you are scared shitless. Because why? Because you have too big of a position. So that's the first reason why I'm not panicking. The second reason is because I saw this as a possibility coming from a mile away. We tried to break about a 30K here. We made a new marginal higher high, another marginal higher high. They didn't work. I got caught up over here. I lost money on this as a trade, right? Not as a long-term bucket, as a trade. I lost money here because Bitcoin didn't work as I anticipated it to work. I thought we were going to have a beautiful short squeeze about a 30K. I got in, it didn't work out. I stopped myself out of trade, made money on other trades, so I'm a happy camper. We make money 90% of the month, so it doesn't really matter in a trading perspective. So that is the second reason why I'm not worried. And the third reason is that this is how markets operate. They don't operate the way we wish them to operate. They operate the way they want to operate. Okay, I will say this again. The market is an entity. It's an entity that combines within it the actions of the entire ecosystem of traders, investors, and whoever is putting a buy or a sell order within the market, all right? And this participation, all right, is what drives the market. And the participation is driven by the thoughts, the short-term, mid-term, and long-term thoughts of everyone in this ecosystem. It's just a beautiful ecosystem, and this is how trading is done, all right? This is how trading is done. So yes, of course, I would love Bitcoin to just rip above 30K, go to 40, make tons of shit of money as this, bull rally or whatever kind of being unfold, but it didn't happen. All right, we go sideways right now. Is that what I really want? No, but do I care? No. Why? Because I'm a trader and I flow with what the market is trying to tell me. My job is not to predict what the market will do. My job is to monetize my views on the markets and my edge on the markets to the best of my abilities, never mind if it's in a bull stage or a bear stage. And yes, we are looking at shorts right now, right? We looked at longs all the way up. Now we're looking at shorts because maybe we're going to go short hunting, and shorts work well. Right, I will take 20% easy on shorts daily if things will break down below the 25K. I think yes, that can happen, and it happened so far as well. If you can look, if you had a look at some altcoins lately, some of them, the really weak ones, just broke down badly, and that's perfect because we can make money on the short. It doesn't matter. You don't need to be to get in love with longs or just with shorts. We can just do whatever because we are traders. And again, our goal is to monetize, right, on our opinions and views upon the market with the best executions that we can on those views and on the edges. All right, everybody, I hope you loved what I had to say. If you liked it, please give me a like and subscribe to my channel. It's good for the algorithm, as everyone says that. If everyone says that, I have to say it as well, of course. But the reality is, I just want to, feel good about myself. A lot of dopamine, and dopamine rush is always good, and I want to make sure that this gets to as many people as I can, because you don't need to panic. You can think like a trader and understand that this is just part of the business. It's just part of the business. That's it. Just like when you go to play cards, you'll have some losing hands, you have some bad strikes, breaks. That's the same thing in the market. Don't get too emotional about it, okay? And if you really want to learn what I do and my edges and the way I operate, just click on the link in the description. It will take you to my Patreon page. That is our community, a community of beautiful traders, boys, girls, and everybody. We are just trading one alongside the other. I give you my opinions almost daily in video, all right? Just like this one. And I give you trade executions on the long side, on the short side, and I just try to teach whatever I can to everyone in the community. All right, I hope you liked it, and I hope this gave you a lot of knowledge to understand what to do. Remember, stay tight and no edge, no trade. Cash is the position as well. Cheers.